They be able to do that? They need encouragement, or what would you mean by that?
By that I mean the likes of the pension fund administrators, who always are liquid, because you contribute to the pension fund, I contribute to it. Every month they get some sort of inflows. So if they pump more of that into the financial market, particularly the equity or stock market, then we shouldn't have a situation where our market is largely controlled by foreign investors.
All right, I'm going to have you to hold your thoughts there in a little bit. I have joining me on phone the business editor of this day, Festus Akombi. Festus, glad to have you join us. You're aware of what we're talking about, the delisting of Nigerian bonds from the GBI EM indices. What do you make of that? Before I begin to dissect it and bring you more into the discussion, what do you have to say about that?
Good morning. Good morning to everybody.
Good morning to you.
As far as I'm concerned, I just listened to the last speaker, and I want to align with his thoughts. For now, Nigeria has no cause for alarm. We have everything in place to help us block whatever holes left by the implication of the exclusion from the JP Morgan's index. Like the last speaker said, Nigeria has the capacity to absorb whatever bonds offloaded by these foreign investors. I think it's a lesson for us that this is time for us to encourage our local investors by putting in place appropriate policies that will help us to have indigenous development in Nigeria. As far as I'm concerned, there's no cause for alarm.
When you say, Festus, it's gladdening to know that everything is in place. But when you say put in place policies that will encourage local investors, I want you to expatiate on that. I'm sure you have ideas of the policies you mean that can encourage local investors to get more into the market.
Well, in the first instance, there should be liquidity in the system. And we expect the CBN Monetary Policy Committee to take this into consideration at their next meeting in the next 2 weeks. It should free the economy. It should allow, like this monetary policy risk should be, the hold should be released. Then we expect the cash reserve ratio to trend down. If the banks are ready to lend money to the manufacturers, of course, development will take place. And performance at the stock exchange will improve. This will encourage local investors to come around. You see, we should not be deceived by the noise made by JP Morgan. JP Morgan is just standing for the interest of portfolio investors. What students have done is just to guarantee Nigerian economy, to protect the Nigerian economy. That's why I want everybody to queue behind CBN this rate. By allowing the development to trend down, people will be encouraged to come around. We have people who can mop up some of these investments. Like the last week I said, you look at the pension fund, for instance, we have about 12.4 billion naira. $12.4 billion, which if you look at it with the 2.5 billion that is, the outflow that we're talking about, so we have no cause for alarm. What I was saying is that we have the capacity, local investors have the capacity to mop up whatever is offloaded. So there should be liquidity in the system. Manufacturers should be encouraged, and we should have favorable investment policies. We are waiting for the president to release his economic team, and when we have a minister of, finance minister that has the influence to attract, it will definitely attract foreign investors. These people will come and beg us. So, but we have to put our house in order first for other people to come around to help us to build it.
Right, I'll get back to you, Festus. Just hold it there. Economic team, these people will come and beg us. We'll have to put our house in order first. The moment JP Morgan released this, what they intend to do, FGN had to fault that decision. Mm-hmm. They said, in spite of the 60% fall in oil revenues, which should reduce the liquidity that we've been talking about here, FGN ensured that genuine and effective demand was taken care of. That's one. Two, that forex transactions were posted online on the Reuters trading platform. And then the three, that official forex window at CBN was closed. Mm-hmm. I want you to respond to what we're still going to talk about the reasons for foreign exchange restrictions from the federal government side, but I want you to respond to the statements, and then maybe you also add maybe he missed out something on policy that could encourage local investors to get more into the market, and maybe you could also add.
Well, what I think, I Festus spoke in line with what I'm expecting, and but the only sort of area where I think we may not really say in the immediate term is what happens to the monetary policy of Nigeria, of the CBN. If you look at it, we've been on a tight monetary policy stance, the CBN, over the last 4 years or thereabout. The question is that likely to change this month? Because next week they are meeting. To my mind, the answer is no. And there's a reason for that. If you look at it, he spoke also about, the finance minister, or even you spoke about it. At the moment, we don't have the cabinet in place. And the CBN appears to me to have exhausted all sorts of monetary policy tools, because any further tightening will probably be damaging the economy. Because we already have a situation where interest rate is high. We also have a case where the bank's liquidity have really fallen. And something major is going to happen this week. The CBN and the federal government is looking for all banks to comply with the Treasury single account policy. So the moment they do that this week, the ultimatum they give them is tomorrow. So this week,
15th, yes.
15th. So the expectation is that liquidity is going to reduce within the banking system. And if that happens, what it means is that interest rates will probably go up. And they cannot again sit next week amid the rise that we'll see this week, and then raise interest rates again, say they are tightening further. They cannot also sit next week and say they are doing more some sort of cash reserve requirement, by the banks after, interest rates have risen this week. So next week, I think they probably just have to leave everything, untouched. And liquidity injection into the system, to them, may appear too early, because they've said in the past that they are waiting for, the cabinet of the government, so that they see some sort of blueprint, economic blueprint by the administration, and then before they begin to now see some sort of collaboration, between the monetary policy and also fiscal policy. So there is no such, cooperation or collaboration at the moment, because we don't have, the people in place. So the moment they come in place, and then they probably begin to talk. But that, I think, will not really happen until maybe the next monetary policy, which comes up in November. Unless there is something urgent, then there probably will
trigger it.
Exactly. So then we'll probably be talking about maybe October. They call it an emergency meeting to pump liquidity into the system. But as I speak, I really do not see them, doing anything, in terms of either further tightening or easing the monetary policy stance.
But you agree with him on the fact the other policies he talked about that can encourage investors? Or you
I perfectly agree with him, and that is what we are talking about. So the pension regulators, I think, to my mind, need to do some sort of review of their policies. These policies should allow and encourage investment into our financial market. Nigeria is one of the emerging markets in the world, not even the Chinese market, where we see huge foreign investors. Early this year or sometime last year, foreign investors were about 60% of the stock market, and 40% controlled by the local investors. So what happens to such a market? So that means the moment foreign investors are pulling their cash out of the market will suffer. And the moment they are bringing in money, the market enjoys. It pops up. And so market largely being determined, the movement of the market largely being determined by foreign investors, to my mind, is unacceptable.
Oh, good. All right. Festus, sorry I kept you. Let's take it from where he stopped. Is unacceptable to him, like I was discussing with him earlier on, that and like you said, that even if the foreign investors move out and sell their bonds, that we have enough the capacity to mop up the bonds. I want you to take it up from there before I go to the next thing I want us to talk about. Festus.
Yeah. Well, like you said, when we are talking about these foreign investors, we are talking about hot money. Hot money will come and will boost our foreign reserves, right? But because hot money will come in and boost our foreign internal reserves. But as we know, these are not the kind of money that will sustain the economy because investors are not Father Christmas. They are looking for better yield. So they can come today and go tomorrow. Nigeria cannot plan for that kind of money that will come and disappear. That is one of the reasons why I suggest that there's need for us to encourage local investors. Let them come around. Look at what Dangote is doing. If you have more of that, it's going to provide jobs. It's going to, stabilize the economy. The tension will not be there. So that's one of the reasons why this present administration, if we talk about change, one of the changes that we are looking for is to encourage local investment in the country, which is going to be our own. It's a homegrown one, and almost everybody is doing that. India is doing it. China, that's why these two countries have visited JP Morgan. Heaven did not fall. So Nigeria too, heaven will not fall if you know what we are doing. That's one of the points and reasons.
All right, heavens will not fall. Festus, quite fantastic. You talked about China. We're going to get to that because I was discussing with him the China-India situation. We will get to that. But the FGN did give reasons for foreign exchange restrictions, which, of course, JP Morgan based, that was their basis for taking the action they've taken concerning withdrawing bonds from the GBI EM indices. The reasons they gave, I'd mentioned them. One was the question of speculation and its danger and what it does to the economy. And then round tripping and rent seeking. I can understand speculation, frankly. Round tripping, I don't quite get it. I need you to talk about that. Rent seeking, that beats me, Let's talk about this three. I'd ask to get back to the studio and we'll look at it. The reasons that federal government gave why they are doing an ordered kind of a market, the bond market.
Well, when there's no regulation, especially in a country like Nigeria, people are bound to abuse the system. The truth of the matter is that we have the issue of speculations. Speculators are just traders. They look at, okay, tomorrow the dollar will be like this. Because they're in charge, because they have this chunk of the money, they're able to dictate this at the detriment of the economy. What CBN has just done is just to step in and say, look, if you have the new request for dollars, for the foreign exchange, we have the capacity to make your demand. But in the past, when people just make demand for frivolous things, just to, we have what we call arbitrage, you get the dollar at a lower rate and you want to sell it. And that's why we have why these black marketers are thriving, But CBN enough is enough. If CBN allows this to go in, then there will be devaluation. That was why one of the problems we have, pressure on us to devalue the currency because the value was going down. That's one of the reasons. And the dangers of devaluation. If Nigeria should devalue, then the dollar will grow as 300 naira per dollar. Then we're going to export our, employment because what means that it will be difficult for manufacturers in Nigeria to compete with imported products. It means that most of these products will be imported. In fact, the situation will be so hard for some manufacturers that they have to relocate to, better areas. And you know what that means? We're talking about an unemployment situation in Nigeria. Then that's going to heighten the situation. So that's one of the reasons why the CBN decided, look, enough is enough. We have to control this. Probably when the situation improves, it's going to relax its grip. Like I said, we don't have to lose our sleep over what has happened. JP Morgan is not going to Nigeria. He's not going to tell us how to run this country. Whatever they are doing is done for the interest of the portfolio investors, not for Nigeria. So, that is the point I'm trying to make.
All right, I'll still get back to you, Festus. He made some points, and I'm sure you're going to respond to them. From what I learned, we actually have bonds extending up to 2017, 2014. And so, just like he said, we don't need to be anxious and all that this is going to happen just in the short run. And then if we get our house in order, things can take shape.
Yes, I agree with him perfectly. And I said earlier on that the yield curve sort of responded to that news like just a day. And it began to correct itself the following day. You know, when you
Yeah,
have
just like you said.
exactly. So when you have such a situation, then it tells you that there's really no need to panic. But what I think Nigeria is suffering from at the moment is global commodity prices. There is an inverse relationship between the US dollars and commodity prices.
Because we just import and we don't export. Is that why?
It's largely because these commodities are priced in US dollars.
Okay.
Once the US dollars are strong, if the dollar is strong, then most likely you will see commodity prices sort of falling.
And that's why he was talking about, because I also read that 260 to a dollar and up to 300. That's going to be killing, really.
Yes, it's going to be killing if we do further devaluation. But the question is, for how long can we manage the current situation?
They should be able to. Now, that's where the issue lies.
Yes, exactly. So because what we have now is they closed the RDAS window. The FX RDAS window was closed in February, and then it now turned to an order-driven market. Yeah. A market that used to be a two-way quote market
is now an order-driven.
It's now an order-driven. Okay, so what were they trying to do is just to phase out speculators in the market.
Yes.
And trust me, even banks themselves do this, speculating the market, and even individuals that never had, domiciliary accounts, when they hear about dollars, movements against the naira, they will quickly go and open one and be buying dollars.
And speculating.
So, speculative demand. So that is what the CBN is looking to face out.
Yes.
And they are winning that.
Yes.
That
to a large extent.
To a large extent, but there is still a downside. What they have done so far has resulted in some sort of moderation in the cash market, FS cash market. If you get on the streets now, the BDC guys will sell to you at lower prices compared to what we have like 3-4 weeks ago. That is partly because of the measures put in place by the CBN. But what about the transfer market? The transfer market has not really been helped at the moment, and I think there is need for the CBN to do something around that area. Because what we have now is a situation where if you want to buy dollars, via transfer, you pay like $2.30, $2.36, per dollar. But if you want to buy on the street, cash, you pay like $213 to $215.
Quite a gap.
Quite a gap. That particular transfer market, is currently being constrained by the no dollar deposits, no foreign currency deposits, policy of the banks.
You're going to get to this. We're going to take a break. Hold that thought. And you're going to be telling us what you would want them to do. I'm sure you have that idea on the transfer market. But you're going to hold it now. I'll just take a break. When we get back, we'll continue on that line. Festus, I'm going to ask you to hold on too. When we get back, we'll continue with you, but we'll take a break now. It's not a TVC Breakfast Show. We'll be back in a bit. Stay with us.